Hello and welcome to our webinar, Financing India's Solar Revolution, Opportunities and Challenges. We're very excited today to have some excellent speakers to be able to go through with us some of the investment and project development opportunities that currently exist in India. I think globally one of the most interesting solar markets. And so we'll have a chance as well to be able to ask some questions and engage in discussions to be able to gain a better understanding of the market and see what's out there. So just to quickly introduce our speakers, we have Jasmeet Khurana, who's Head of Market Intelligence with Bridge to India, as well as Satya Kumar, who's the founder and managing director of Sri Shakti Alternative Energy. Both Bridge to India and Sri Shakti are partnering with us for an event which we're hosting in India in October, which I'll tell you a little bit more in a second. So just to give you a little bit of background information on Solar Plaza, Solar Plaza is a PV-focused global information platform. Our mission is empowering professionals in the solar business development by building the most valuable solar PV network. And Solar Plaza was founded in 2004 and has experience organizing over 70 conferences and trade missions around the world. So specifically our trade mission model, we've done over 20 trade missions, and as you'll see from this slide, in various markets around the world. The way that these trade missions work is that we bring a delegation of a maximum of 40 participants. And these participants are usually C-level officers and senior directors who are looking to expand their portfolios, their solar portfolios in new and emerging markets. And so the 5-day trade mission model, which we always use, we have the opportunity to engage in several meetings and workshops with leading experts in the field. We hold meetings with the ministries of energy, grid regulators, and other types of stakeholders, such as banks, financial institutions, and we always also end up with a conference or 1 or 2 day conference in the country, where we also invite lots of local solar stakeholders. In India specifically, we've organized 3 prior events. On this slide, you can see some of the track record from our events in 2012, where we had 180 conference attendees, and as you'll see from the statistics from the pie charts here, the delegations, the type of attendees that come to our events are definitely high-level delegates. So as I mentioned, we are organizing an event in India from the 5th to the 9th of October, the Solar Finance Tour India. So this webinar is a prelude to this event, and what we aim to do is bring a delegation, as I said, of up to 40 international investors, project developers, manufacturers, and other stakeholders interested in expanding their portfolio in India. And so again, you'll have the opportunity to meet with all the leading public and private institutions in the country, as well as international finance institutions, banks, and other stakeholders. And the goal essentially is to be able to provide an overview of the investment opportunities in the Indian solar market, project development opportunities, and also to understand what are some of the major challenges that still exist. But for that, I think I'll let our speakers go and tell us about the Indian market specifically, and then finally on this slide you'll see some of our upcoming events later this year. As you'll see, we have events in several markets, including the LATAM region. We have events in Europe and in Asia. So yeah, I'll no longer take away the time from our precious speakers who are going to help us analyze the market. But before we do that, we'd actually like to launch a poll question. So the Indian MNRE has set a goal of installing 100 gigawatts of solar capacity by 2022. So what we'd like to do is ask all of you to basically give us your opinions on how much solar capacity will actually be installed in India by 2022. So we'll be launching the poll. So if right now you could basically make your estimates. I think that we will also be hearing from our panelists what are their opinions on this goal and how much will be installed. But I think, it would be great if you can now make your estimates. Okay, great. So thank you very much for making your guesses. Let's see the results of the poll if possible. And okay, so what we see is that most people seem to think that there somewhere between 50 to 75 gigawatts of solar capacity will be installed. Quite a few people also think that it might be a little less than that, over 25 gigawatts. But I think overall we're seeing that people are relatively confident in the opportunities, but I think there's still a bit of skepticism about the ability to reach the 100 gigawatt goal. So yeah, no, interesting. So I think that we can go ahead and hear from our first speaker, who is Jasmeet Khurana. He's, as I mentioned, the head of market intelligence at Bridge to India. He has experience working in many aspects of the Indian solar market, including policy analysis, technology, market trends, and he has a very good understanding of the current profile of the Indian market. And actually, Bridge to India recently released the Indian Solar Handbook 2015, which is a yearly report which they release focusing on the Indian solar market, the opportunities. And if you haven't had a chance to read that yet, I would definitely advise it. So yes, maybe if I could then pass the role of presenter to Jasmeet. Jasmeet, do you hear me?
Yes, I can hear you.
Hi, Jasmeet. Thanks very much for joining us. I'm very
Yep.
looking forward to your presentation. So I'm now passing the role of presenter to you. And if all
Yep.
goes well, we should then be able to see your screen in a moment.
Yep.
Okay, thanks very much,
Uh,
Jasmeet.
yeah. Thank you, Roger. So, good morning, afternoon, evening, depending on where you are. So, we'll just look at all the opportunities that exist or are coming up in the Indian solar market, go through the details and challenges and financing opportunities and investment opportunities in the country. So just quickly looking at what the government plans to do, it's looking to 200 gigawatts basically under these three headers. 40 gigawatt of large scale projects is something that India has already built a track record of. 4 gigawatt is already installed. Medium scale solar projects is basically an entrepreneur scheme in India, which will encourage smaller entrepreneurs to build zero point 0.5 megawatt or 500 kilowatt to 5 megawatt kind of projects. So that's the medium scale solar projects. India wants to get 20 gigawatt through that, and a very ambitious rooftop target for 40 gigawatts. And actually, this 100 gigawatt plan, although it has been doing the rounds for quite some time now, it is only today actually that the cabinet has approved it, with a lot of other I mean, they've highlighted a lot of other incentives and mechanisms of how they plan to get to this 100 gigawatt. For example, they're planning to use mandates and building bylaws. They want to do a lot of things for rooftop solar, and a lot of things planned for the other two segments as well. So details of this will start coming out with the roadmap we expect very soon. So just heading in to what the government has been doing all this while to ramp up, obviously, from the previous target of 20 gigawatt to 100, which is a big jump. So some of the fundamental things that have changed since the new government took office is, A, they're planning to amend the Electricity Act, which kind of is the basic regulatory policy framework behind India's power sector. So they want to raise the renewable purchase obligation for all consumption in India to 10.5% by 2022, which would mean that essentially 10.5% of all power in India would be sourced from solar by 2022. That's the mission, and this 10.5 adds up to around 100 gigawatts, which is the target that they've set for themselves. There's introduction of renewable generation obligation, which is basically all conventional power producers will be obligated to also produce some renewable power. Then they want to change some of the tariff policies in India to make sure that the increase in cost can be passed on to customers, and the obligated entities find it easy to meet their targets. There's a Renewable Energy Act proposed, which will, because of all of the regulations and policies in India had been for centralized generation, so they want to make sure that decentralized generation gets its due. So in that sense, they want to bring out Renewable Energy Act as a specific act which caters to renewable policies and regulations in India. a lot of work is happening because power in India is a state subject or a concurrent subject between central government and state government. So state governments play a big role in how solar shapes up in the country. So a lot of coordination between center and state is happening on these targets. On the rooftop front, for example, 25 states within the span of a few months actually have released net metering guidelines. A lot of work is happening on those fronts. So India, I mean, all these things are getting coordinated already. So we see this center-state coordination happening both on rooftop solar as well as on utility scale in terms of land procurements, infrastructure for evacuation, etc. So see, these fundamentals are being put into place to make sure that India is actually able to quickly ramp up capacity. Or most of these things are still under proposal stage at various stages in the parliament, outside of parliament, and information stage. So these building blocks are all fundamentally being put into place right now as we speak. So we'll first look at utility scale solar, which is the immediate opportunity in India and something where the market has already or has already passed the nascent stage and is now looking or now entering maturity. Uh, so, like I said, India has already installed 4 gigawatt of utility scale solar spread across pretty much all of India. 3 gigawatt is under development. Under development is basically projects where power purchase agreements have been signed and they're either under construction or getting their land and doing all those things. So this is where we stand. Key states we see are on the western and southern side of India, where Gujarat was one of the leading states in the initial days. Now Rajasthan has overtaken Gujarat. Madhya Pradesh, which is the central state in India, is also a state which is expected to add a lot of capacity. Most of the new allocations which have happened in the last 1 year have been in the southern states. So the west and southern parts of India are actually the most active in terms of new capacity addition. This is a slide on how solar tariffs have fallen in India, primarily based on obviously the global uh, prices and how they have come down, plus a lot of competitive bidding, and its impact has kind of flown into the tariffs in India. EPC costs, for example, in India are one of the lowest in the world. IRR expectations are very competitive uh, as compared to interest rates, for example. So very competitive market, prices are very competitive, at least until now. But going forward, we expect as a lot of capacity comes in, our expectations will become nominal, and competition will ease to some extent, and people will get more leg room to invest and grow their portfolios. So looking at the central government schemes, obviously there are central government schemes in where the central government board agencies or central government companies or the central government, the ministry itself comes out with different allocations for people to bid, get their PPA signed, and then invest into and build these projects. Some of the projects which we expect over the next couple of years from the central government are listed here. Around 15 gigawatt is something that the central government wants to allocate as the incentives all provided mostly by the central government. So NTPC projects are basically, NTPC is the thermal power generator in India, but they are playing a role of allocating these projects into private developers. As you can see, a lot of these capacity will go to private developers. It will be either through tariff-based bidding or through viability gap funding. And some of the capacity will go to a public sector, where public sector companies will build and invest into these projects. So this is broadly how it's set up. The central government actually wants to allocate around 10 gigawatt in this financial year, which ends in March 2016. Obviously, that's a very, very ambitious target and depends on states' willingness to come forward and opt for buying this power. Depending on whether or not that happens, the central government is actually aiming to allocate 10 gigawatts in this year itself. Moving to the state governments, obviously states play a very important role in solar capacity additions, apart from the national solar mission, which the central government kind of undertakes. So here we're looking at the solar parks policy, which is again a center-state coordination where center provides some funds, states identify land and provide some funds. And the idea of this policy is to aggregate land, get infrastructure for evacuation into place, and then just offer projects to project developers and investors on a plug and play model. So a lot of states have already opted for building these solar parks. A park in Gujarat, which was the first park in India, is already operational with a lot of capacity installed. Andhra Pradesh, Madhya Pradesh, Rajasthan are some of the parks which are currently under development. A lot of other states have signed up and will be building solar parks across the country. So basically what this does is takes away all of hassles around land procurement and evacuation, etc., from developers, and puts that in the government's court, and the government then state and central government coordinate to offer a plug and play project development opportunity to investors. Obviously here, uh, with this kind of facilitation from the government, it becomes more of a financing game. And I mean, the better your terms of financing, the bigger your the project that you can take up, the more competitive you become. Uh, so then there are all these state government policies. Almost all states in India, as you can see, have an active policy. Uh, Here, some of them, a couple of them are in draft. A lot of them are operational policies, and then states allocate capacities outside of what the national government is doing on their own. Most of this allocation is again based on competitive bidding. Uh, so right now, what we are seeing as a trend in state policies is that the states are now revising their policies to the new targets, which is based on a 10.5% RPO. So the new policies, for example, in Andhra Pradesh, which is 5,000 megawatt by 2019, or in Tamil Nadu, which is 3,000 megawatt, or in Telangana, which is 5,000 megawatt, or the new policy which has recently been announced in Maharashtra for 7,500 megawatt. These policies are somewhat in line with the new targets of the government, and the remaining policies are still with the old targets, which was 3% RPO. But we expect these states to come out with new policy documents reflecting the new targets of the country. So that's how the policies are set up. I think Madhya Pradesh also announced a big 7,000 megawatt or something kind of a policy recently. It's in draft stage, and we see around 48-50 gigawatt of targets at the state level already having been announced. These are some of the allocations expected this year. So, like I said, and national government wants to allocate 10 gigawatt. We are saying that at least 6,000 megawatt or 6 gigawatt is something that they might realistically be able to allocate at the central level, which is marked in orange, and then in the state at the state level, different states will come out with their own allocation mechanisms. Tamil Nadu is ongoing, Telangana is ongoing, and Maharashtra and Karnataka expected to come up. These are only some. There might be more which might come up during the course of the year. So we actually obviously the government has set a target of 100 gigawatts by 2022. By 2019, I think they want to reach around 69 gigawatt. Being a little conservative here because everything is not known, and only based on what we already know, we think that around 24 gigawatt of additional capacity will be added between today and 2019, taking the total to around 28 gigawatt by 2019. And for all the people who marked 50 to 75 gigawatt of capacity addition by 2022, I would kind of agree with that number. But that would have to mean that central government actually becomes more proactive in terms of its policy backing and in terms of financial and other support. A lot of new ideas are being toyed around with, for example, dollar-dominated bids to allow international investors, so that there's no currency risk involved, and the cost of hedging kind of obviously it doesn't go away, but that cost of hedging is built into an aggregate hedging for all these projects, and that kind of reduces the cost of currency hedging and the impact of volatility of currency. It helps international developers make informed decisions and reduces their risk, lets international capital flow into the country. And there are other such innovative ideas that the government is working with, but obviously all these ideas will come to fruition once the finance ministry approves, and there are other agencies involved in terms of getting on board before these things actually become operational. But here we're being realistic in saying, or at least Bridge to India in its current state of things, thinks that around 24 gigawatt of new capacity or 28 gigawatt of total installed capacity can be expected by 2019, and then obviously it will grow from there. Just coming back to this, obviously just to highlight that state government role will be crucial apart from the central government policies. Obviously, central government policies provide more bankable off-takers, provide easy plug-and-play kind of projects. State governments are slightly more complicated, but obviously the opportunity there is also large enough for Indian and international investors to take seriously. Just looking at the overview of the project development landscape in India, it's kind of maturing already. We see participation from all sorts of companies. There are international utilities like Semcop from Singapore, Fortum, EDF, European utilities, and CLP, which is China Light and Power. We see PE-backed Indian companies which have actually been have taken up a big share in the Indian market. We see international developers, solar developers. There are a lot of Indian conglomerates and corporates. There are a lot of public sector companies. So it's a good mix of all sorts of stakeholders. Different players have different characteristics. Maybe you can go through this presentation in detail when after the session and have a look at how exactly these players are investing and what are their investment philosophies. Uh, Moving on to just how it has been playing out in terms of development and market shares. Of course, Indian corporates were the early movers in the market. PE-backed renewable IPPs were playing an important role. International utilities and international developers were kind of on the sidelines with public sector companies. But what has really happened over the last 1 or 2 years is that cost of financing and the terms of financing and the ability to raise cheaper capital outside of India has become a key success factor for developing and investing into solar projects in India, which basically means that PE-backed renewable IPPs who have raised money from outside India, international developers, international utilities are all increasing their market shares. Indian corporates have kind of shrunk in the sense that their IRR expectations are much higher and their cost of capital is higher than most of the international players, which means that the pendulum is swinging in favor of international investors and international capital, at least in terms of market share. So this is for projects greater than 10 megawatt. So that's a clear trend that we see emerging in the Indian solar market. Just looking at who have been the key players, obviously, very limited participation actually on the debt side from international capital. On the private equity side, there have been a lot of private equity participations into Indian companies. Most of the debt currently is coming from Indian banks. The government desperately wants to change this and to grow the appetite for international debt for Indian solar projects, and then that's something that they want to explore through this dollar-dominated bids and getting more international investors and developers into the market. So there's a clear government initiative to get as much international capital into India as possible, primarily from the objective of lowering per unit cost of solar in the country and obviously getting international investments into the country. So this is basically how the utility scale solar market is playing out. Some of the key challenges include still land evacuation, ability to raise non-recourse finance for projects in India. So these are some of the challenges that still exist, but it's maturing and banks are more confident. Something that is desperately needed is more appetite for international debt, especially, and obviously as more and more international investors and developers come into the Indian market, that's something that's how the government wants to alleviate that problem. Now coming on to rooftop solar, obviously rooftop solar is a very nascent market in India, around 300 megawatt installed till date, but huge plans from the new government's perspective. They see rooftop solar as a key market. Obviously 40% of the target has been earmarked for rooftop solar. So there's a special interest, and obviously they understand that it is very ambitious and they're taking actually a lot of steps, but where we get from here, that's still to be seen. A lot of incentives would be required, probably a lot of market creation, ecosystem creation would be required. How quickly that can pick up, we'll just come to the slides for that. So around 350 megawatt, like I said, has been installed. It's fairly small if you compare to other international markets as well as the utility scale market in India. Around 40 megawatt of this 350 megawatt is under the OPEX model, which is similar to the Solar City model in the US, but a lot of companies are interested in that. Some bankability issues around legal recourse in India and all those issues still exist, but obviously the market is very large in its potential. And I mean, so that's where the government wants to now focus its attention and make sure that it's able to give this initial fillip to this market so that this market takes off. Uh, like I said in my introduction, a lot of states have come up with net metering guidelines for rooftop solar. There's a concerted effort. They want to change some laws in India to make sure net metering becomes compulsory actually for discoms to implement. So a lot of momentum towards net metering is what we are saying. There'll be some subsidy which will continue, but they want to largely do away with subsidies as much as possible. They're looking at interest rate subvention using international capital from World Bank, KfW, ADB. So a lot of those plans. And obviously, the fundamentals for rooftop solar are very, very strong in India. Here you can see the bars are basically the tariffs or effective socket prices for consumers in different states of India. And then the three lines are different solar cost. The blue line on the top is solar cost for without any incentives. Then there's an accelerated depreciation benefit, or that's a tax benefit available in India, the cost with that. And then the cost with interest rate subvention is the yellow line along with accelerated depreciation. So you can see that almost more than half the states in India are commercial consumers in more than half the states of India are already within socket parity. So for them, it makes sense to go solar already. So essentially, consumers in India are divided into four segments. Commercial consumers, which is basically malls, hotels, all these kinds of consumers, pay the highest tariffs. So this chart shows that category. This category accounts for around 15% of power consumption in India. The next category, which is the biggest category by power consumption, around 50% power consumption in the country, is industrial consumers who pay slightly lower tariffs than commercial consumers. For them, again, with some of the incentives, a lot of states, consumers in a lot of states have already achieved socket parity or grid parity, which means that they can now start going solar. And then we come to the projections for rooftop solar in India. These are Bridge to India projections, again, based on what is currently known and available. Obviously, a lot of new announcements are still expected, but we're saying that the market will grow to a cumulative capacity of 4 gigawatt by 2019. Will start to grow over a gigawatt a year by 2018, making it one of the larger markets for the rooftop side. So putting this 4 gigawatt and 28 gigawatt of utility scale together, just these two categories out of the 80 gigawatt planned through central under the targets, we get to around 30 32 gigawatt or so. So that's how Bridge to India is projecting the market to grow. So that's it from my side. Thank you so much.
Thanks very much, Jasmeet. It was a great overview, I think, of the market at this stage, and I think you brought up a lot of very interesting points. We are receiving some questions, and I think I might have forgotten to mention at the beginning that please feel free, audience members, to pose any questions that you have for the speakers in the question box that you can find at the bottom right of your screens. So I have a question for you here, Jasmeet, regarding. So you spoke a lot about the proposed policy changes, or the changes that are the policy changes that are currently being worked on. One of I think the concerns that I've heard from some of the investors, which have shown some interest in the market and participating in the trade mission that we're organizing, is in terms of you mentioned that the solar tariffs are indeed some of the lowest in the world. And there's a worry that the margins are quite small for both project developers and investors looking into this market. I mean, do you think that it's still an attractive market? Is it something that yeah, and what types of the stakeholders that you mentioned do you think will come out on top with these these biddings?
Yeah. Yeah, so I think India is a volumes market in that sense, or is going to be a volume. It's not obviously a volumes market yet, but it's going to be a volumes market in the future. And of course, like I mentioned, yes, the it's very competitive today, but because what has been happening is has been a lot of interest, but the capacities going on auction have been low, so there have been oversubscriptions of 200%, 300%, 500%, making it very competitive, because people really want to build up their portfolios, go for public offers, and just really ramp up capacities in India, and the opportunities to do so have been limited until now. But obviously, as the market grows in terms of new allocations coming up, if the government is able to do, say, 10 gigawatt kind of allocation in a year, which means that there'll be enough room for everyone to grow, and which means that the competition will ease to some extent. So that gives some optimism, but obviously I don't think India is going to offer very high margins and returns in that sense. But it will continue to stay competitive, but it will be one of the markets where you can build up a lot of capacity and portfolio and grow your portfolio. So I think from the kind of players who will emerge on the top will be typically players who are actually very competitive, both on execution side in terms of their capex, and also and even more importantly on the finance side. So the cost of finance will play a major role in determining what kind of players are able to come on top in terms of market share.
Okay, excellent. Thanks very much, Jasmeet. Another question we got here is, how do you think that you mentioned that there's, a lack of debt, especially I think internationally. I mean, moving forward, how do you think that all this debt will be funded, and at what rate do you expect, this debt to be available?
So currently, debt in Indian market primarily from Indian banks is available at, say, around 11.5% kind of rates, or 11.5 to 12%. International debt after hedging is typically, say, 100 basis points or so, or 50 to 100 basis points or so lower. In some cases it's almost similar. Uh, and in that sense, we think that a lot of capacity for a lot of new capacity to come up, international debt availability in itself, because I'm not sure how much appetite there is of international lenders for the Indian solar projects yet, and obviously that will depend on international developers coming to the market and margins increasing and all those things happening. Most of the international debt that exists today is developmental capital, so it's mostly IFCs and ADBs of the world which are doing these debt investments in India. There's been some EXIM financing from the US. So I think more private debt from private banks across the world is something which we expect more participation of international developers will bring in. And if the dollar-dominated kind of bidding process moves forward, that will give incentive to international players to come in, because their risk kind of goes down, especially the currency risk, which again will help international debt appetite to grow.
Yeah, I wanted to ask also one other question related to PPAs as well. I know that one of the concerns of international investors and project developers is the state of the discoms or the utilities, the distribution companies at the state level in India. Is this a major concern? Do you see? I know that there's certain states where the financial standing of certain discoms is seen as a risk. How do you feel about this?
So yes, so state distribution companies and their bankability is a risk, and obviously some states do better than others. So that's something that has to be kept in mind. Central government projects obviously have lower risk in that sense, because the off-taker in that is typically central government companies or central government owned companies or central government agencies, which are much more bankable. States, obviously your investments, you have to pick and choose the right investments. So obviously there's a risk reward attached to it. So the states with the lowest bankability will give you slightly higher margins, because the competition there will be lower. So I mean, it's a calculation that every investor and developer has to take based on their risk appetite. But yes, that's actually a big concern, and that's something that needs to be studied before investing.
Okay, excellent, Jasmeet. Thanks very much. And one last question for you before we move on to Satya. In terms of net metering, we've seen that net metering is now being introduced into some states. Is net metering taking off, and do you see it playing a significant role in future projects?
So I think just from a direction perspective, India has decided to go the net metering way, and it's not a GBI or feed-in tariff or other proposals which were on the government's table in that sense. So net metering is going to play an important role. Obviously, it will take some time for all these because these are new policies. The distribution companies, especially at the local level, people don't know how to implement it. What are the actual processes? So there needs to be a lot of capacity building that needs to go in from the regulatory and distribution company side. So you'll have to give it some time for it to become really operational and running. There are some states, for example, Andhra Pradesh, Punjab, Delhi, where it has started functioning and permissions for net metering are being granted. There's some states which are more progressive, there's some states which are less progressive. So it will be a very state-specific issue in that sense. But obviously there's a concerted effort to try and make this work. So that's something we expect net metering to play an important role going forward.
Excellent. Well, yeah, thanks very much, Jasmeet. I very much appreciate your presentation. We had some great questions, and I think the audience very much appreciated hearing some of your predictions and your market overview. So thanks very much. Please don't run away. We'd like to come back and have a little bit more discussion at the end after Satya's presentation. But so yeah, now we'd like to move on to Satya. So thanks very much again, Jasmeet, and Satya. Are you there?
Yes.
Thanks very much, Satya. So just quickly to introduce, Satya is the founder and managing director of Sri Shakti Alternative Energy. He's also, as Bursa India, Sri Shakti Alternative Energy is a partner, a content partner of ours in this trade mission that we're organizing. Satya has experience working with a variety of stakeholders, including international organizations like UNICEF, ADB, IFC, and has ample experience in the alternative energy market in India. So yeah, Satya, thanks very much again for joining us. I very much look forward to your presentation as well. And if all goes well, you should now be able to receive the role of presenter and take over.
Thank you, Burha.
Thanks very much, Satya.
Yes.
Yes, we.
Yes. Okay.
Yeah, we don't currently see your screen, Satya. I'm not sure if.
Okay. Sure, that's good.
Okay, well, let me just do that again. Sorry, Satya.
Yeah.
Apologies for the technical difficulties.
All right. So, do you see my screen now?
No, we.
Oh wait,
We
there
still.
is now.
Yes, now we see your screen. Thanks very much, Satya.
Sure.
And again, thanks
Okay.
for joining us.
Good morning, Americas. Good afternoon, Europe, Africa, Middle East, and good evening, India. I hope our solar friends in Southeast Asia, Far East, and Australia are sleeping and will watch the recording tomorrow. Thanks, Borja and Solar Plaza, for inviting me to speak at this webinar that is a precursor to the Solar Trade Mission to India in October. We hope to see all of you in the distinguished audience here with Solar Plaza in October, because I'm sure you will join the Solar Trade Mission after we finish this fantastic webinar. I'm going to start my presentation by asking two big questions, and I bet that you will be glad that I'll answer those myself. So the big questions are, India will develop 100 gigawatts of solar by 2022. This is the Prime Minister and the government's target. Can India do it? And our power minister, Piyush Goyal, says, I want to kill 10 birds with one stone. Can Piyush Goyal do it? When you think solar, you think Germany. Germany is the top solar PV capacity, more than 38 gigawatts by end of 2014. And where is India compared to Germany? This year, China will definitely overtake Germany in terms of installed capacity because they're adding more than 10 gigawatts, but India is a long way behind. So how do you beat the leaders? You can't beat the Germans in football even if India launches a national mission to win the World Cup championship. Or it may take a very, very long time. But for solar, we already have a national mission and some bold imagination. I say imagination is more important than knowledge because knowledge is limited, whereas imagination encircles the world or even the expanding universe. So Germany versus India, yes. Rajasthan is equivalent to Germany in terms of land area and receives more than 50% of the 150 times the 150% of the solar radiation of Germany. So I think there's a potential for Rajasthan alone to do as much as Germany as or more. So I'm going to substantiate this not just by imagination or big audacious goals of political leaders. So let's look at the International Energy Agency's Solar Roadmap 2014. In 2010, IEA made a roadmap for solar PV, which was 210 gigawatts of cumulative capacity by 2020, which is being achieved 5 years earlier in this year itself. And the capacity for 2020 has now been revised because IEA made a new solar roadmap in 2014 because the target is being achieved ahead of time. And this capacity is 420 gigawatts, double of what was foreseen in the 2010 roadmap. And IEA in 2014 has forecasted 142 gigawatts by 2030 and 575 gigawatts by 2050 for India in a high renewable scenario. I'll explain what it is later. So India's new target of 100 gigawatts under National Solar Mission can be seen against this background. Now I will quickly run through some slides to establish the authenticity of these figures. So you know that solar PV market grew 49% year on year on average since 2003. The maximum growth in PV markets has taken place after the global financial crisis in 2008, the collapse of Lehman Brothers and when commodity prices and yes, oil prices were rather low. Annual capacity additions have gone up from 7 gigawatts in 2009 to 37 gigawatts in 2013. Total installed capacity has gone up from 23 gigawatts by 2009 to 135 gigawatts in 2013 to 37 gigawatts in 2013. So, we're going to cross 200 gigawatts in 2015. So, this is the global electricity mix in 2015 and the three scenarios that IEA has projected. This is the 6DS, which is 6-degree rise, business as usual case, 60-degree rise in global temperatures. That's the second bar, and 2 degrees rise in global temperature. And the last one, high renewable energy scenario, is we do better than, we stay under 2 degrees rise in average global temperatures. So I think those of us in this group who will still be around in 2050 should hope that average global temperatures do not exceed more than 2 degrees. That is a 2DS scenario, which means lower thermal power. The black is the thermal power, and you see here it's hardly there. The high renewable scenario may very well happen because of resource constraints and price of coal. And in this scenario, solar and wind provide 38% and PV provides 16% of the global power. So you see, in this high renewable scenario, India will have 22% of its power coming from solar PV, some from solar CSP. I guess the teething problems and all that will be solved by then. And you see the black bars here is thermal power. It may not be giving nightmares to coal-based utilities just as yet, but this is one possible scenario. So the IEA Solar Roadmap, this is what the figures I gave earlier, and this was made in 2014 before the government in India announced the target for 100 gigawatts by 2022, 142 gigawatts by 2030, and 250 gigawatts by 575 gigawatts by 2050. And you see the corresponding figures for China and the world and all that. Now, this is based on a very sophisticated model called the Markle model, where this model uses cost optimization to identify least cost mixes of energy technologies and fuels to meet energy demand, given the availability constraint of coal, wind, natural resources. So I think this is a very sound logic behind these figures. So let's look at the new Indian roadmap on this background. India has issued a solar potential map for 748 gigawatts in various states, using just 3% of the base land in the country. On that assumption, the solar potential has been worked out to 748 gigawatts, and I think somewhere like about 20% of the rooftop space, both together adding up to 748. You can see the details state-wise. So, after the new policy, the new government has been there just about a year, and then, I think things have taken some time for the policies to take shape and all that, but I'm actually very glad to see that the current solar pipeline in India has already cost 10,000 megawatts, and this is not complete by any means, and I have listed it by Solar Energy Corporation, NTPC, Andhra Pradesh, Telangana, different. So I think this is very encouraging, and then it's good to see that about 60% of it is from the states and 40% from the center. And by end of 2015, this could very well be 15 gigawatts, which the government is targeting. Well then, what about financing and the cost of solar power and the feed-in tariff? Let's look at that quickly. So I'm going to look at some of these project costs, PLFs, interest costs. So these are the PPA tariffs in Andhra Pradesh, which were signed about a few months ago. 500 megawatts has been signed up. You can see these are levelized tariffs for 25 years. The lowest was bid by First Solar, then Acme and various other companies. So this is not the state with the best solar potential in India. So let me take you through some financial analysis we did for a 50 megawatt project. The cost per megawatt is 6 crores or 60 million rupees, say about slightly less than $1 million per megawatt. And a PLF of 19.5% is very easily attainable in Rajasthan. And the tariff I've assumed is 6 rupees. Believe me, as we speak, people, there is already more than 500 megawatts bidding issued by NTPC for Rajasthan, and I think people are thinking of going below 6 rupees for while bidding for those projects. And at these, and I've assumed interest of 12.5% on term loan, debt equity ratio of 70-30, and you reach a equity IRR. With these parameters, you can achieve an equity IRR of more than 15%. So, I mean, it's possible to do debt at lower than 12.5, and project costs could be lower, and maybe the PLF can be higher. So, and if you can manage 80% debt, these figures, the equity IRR will improve dramatically. So, what is the impact of interest cost on the levelized cost of energy in PV systems? At 9%, over half of this tariff that you earn will go for meeting your interest cost. And in India, we are at 12%. That's pretty steep. So, I think most of the revenue is going for servicing the interest. So that's very important, to bring down the interest costs, and that's where many of the efforts of the government are focused upon. So quickly, let me summarize the steps taken by MNRE and the government. NTPC takes on a target of 25 gigawatts. NTPC currently has over 33,000 megawatts of operating thermal power. NTPC will develop 10 gigawatts on its own and procure 15 gigawatts through EPC route and tariff-based bidding. And Solar Energy Corporation is doing its own bidding for 2,000 megawatts or 3,000 megawatts under the viability gap funding, and it's also developing 25 gigawatts of solar park capacity. SECI has been promoted by government to implement the National Solar Mission targets. With all these, you also see after the new government came, the cess on coal has doubled. It adds to the kitty of the National Clean Energy Fund. As Jasmeet said, RPO is being increased from 3% to 20%, 10% by 2022. Make in India has been launched. Trina Solar, Sun Edison, JA Solar are firm plans for manufacturing in India. Investing in renewable energy is considered as a corporate social responsibility, which is mandatory for profit-making companies as per the new Companies Act in India. And then, there are a lot of things that the government has is still thinking, doing, and then already introduced, which are green bonds to raise money abroad at a lower interest rate, and tax-free bonds from within the country. I think IREDA is going to raise about 2 billion rupees under that, and then dollar-denominated PPAs and other measures to lower interest costs. I think these are all evolving. I'm sure all of these will contribute to achieving the targets. So, are you still not convinced? If you're not convinced, I will just conclude with this last slide. And then, some more imagination, put some imagination to work. Well, if you think that, the targets are too aggressive, well, presently we are going through the bidding route. If the time consumed by competitive bidding is avoided through PPAs at a predetermined feed-in tariff, with whatever is coming out through this price discovery, yeah, that can hasten the process quite a lot, because today the bidding process takes about 6 months. And then there is this agricultural water pumping market in India, where the connected load is more than 100,000 megawatts. So, we don't have to copy solar rooftops as in Germany and Japan. And many people say that 40 gigawatt rooftop target may be difficult to achieve in India. It could be rooftops, if not, it can be the agricultural water pumping market. Out of this 100,000 megawatt, which is in rural areas that are far away from generating stations, some of them can go partly off-grid and partly served through distributed generation at feeder level. And I think India has to fix this problem of agriculture, power consumption, which constitutes almost 1/3 of the total power consumption in India, and this market is growing every year. And I think if we fix this problem, then you reduce your transmission and distribution losses, and and taking some of it off grid will really help reduce the distribution company's losses. And then, if apart from agricultural water pumping, we can also use solar charging for electric vehicles with rooftop feed-in tariffs, and it is cheaper than gas, petrol, or diesel by nearly 80%. A study done by our company in Rajasthan reveals a potential of 20,000 megawatts of solar to displace just 5% of gas or petrol used for cars and two-wheelers in only Rajasthan. Now, this 20,000 megawatt also assumes that 50% of the grid, 50% of the power used for charging EVs comes from grid and 50% comes from solar. Now, if you extrapolate to the all India, there is, that's a lot of potential which we are not even talking about today. And it's a good reason to rely on solar because, after all, India's appetite for gold imports everybody knows, and oil is also the other main culprit for our balance of payments problems. 50% of the forex earned through exports by India goes for importing oil, and India imports 80% of its oil requirements. That's a great reason to rely on solar. And Prime Minister Modi already knows about using solar for charging EVs. Earlier this year, Gujarat introduced a pilot project for solar charging electric shuttle buses in the state secretariat, a project conceived when PM Modi was the Chief Minister of Gujarat. India also has a national electric mobility mission that is being revamped. I'm sure with all this, India can do not just 100 gigawatts, but the 575 gigawatts projected by IEA by 2050. Thank you.
Thanks very much, Satya. It was very interesting and very optimistic, I think, look at the market. And I think that, yeah, it's very interesting to also see how you're looking in more of just, more long-term than just thinking about the 2022 goal and what the opportunities are outside of what's already being discussed. One of the questions that we got was related to, the role of renewable energy certificates in India. What is the current role of renewable energy certificates, and do you see that also being a mechanism that could benefit solar?
Yeah, definitely. The market for RECs is subdued right now because the RPOs on the discoms are not being enforced by the regulators. Many of the private utilities and open access consumers who are also the obligated entities, they are buying. But there is also a problem with the rates specified for the REC certificates, which were like artificially high. So I think when the rates are corrected and then RPOs are enforced, which are the amendments being made to the Electricity Act and the National Tariff Policy, once these are done, I think you will see the REC market becoming more vibrant.
Okay, interesting. Thanks very much for that. We do also have another poll, and before that, I asked the poll to the entire group. I wanted to ask you. So you spoke of one of the questions that you asked initially was about Minister Piyush Goyal's ability to kill 10 birds with one stone. Could you just very quickly summarize for us again what that means? Killing 10 birds with one stone. What is he referring to?
Yeah, I think well, he says MNRE, Ministry of New and Renewable Energy. India was one of the first countries, or the first country, to have a separate ministry for renewable energy. It's 32-year-old ministry, and we have done 3 or about 4 gigawatts so far. And I think what he wants to do is do all these things. Now this ministry comes under Piyush Goyal as the Minister of Power. It is aligned with Ministry of Power. Earlier it was an independent ministry. So that is a great thing. I think that is what the National Solar Mission has done, and the new government brought it under one minister. So that gives a great alignment, and you see all the things which are being done now. NTPC taking this big target, and then banks issuing green bonds and tax-free bonds and all that. This great alignment is coming through that. And then the dollar-denominated PPAs. So, with all these, I mean, these are all the things. This is what Piyush Goyal says that, I mean, I think we can't remain at 3-4 gigawatt or 20 gigawatts. Now we need to look beyond for meeting our energy requirements. And this growth is not going to come through thermal or hydro. Hydro projects are delayed because of environmental reasons, and coal projects are already embroiled in controversy because ultra mega power projects, their coal price has gone up, imported coal price has gone up, and they're asking for a higher tariff, which the regulator has allowed, which the states are refusing to pay. So there are all kinds of problems, and so I think the biggest difference we see in the last year or so is everybody in the power sector in India is betting on solar now, which was not the case 5 years ago. I mean, it was just like wait and see or something. Solar was also ran. Now solar has become mainstream. It's no longer hydro or thermal. It is solar is the main thing. So I think this is what the power minister with all these schemes and all that, when he says that I want to kill 10 birds with one stone, dollar denominated PPAs, interest subvention or targets. I think the greatest thing Prime Minister Modi and Piyush Goyal have done is announce this 100 gigawatt target. This is a rallying cry, and so many things which were not there before, so many people who were not there involved before, Indian bankers, Indian developers, they're all coming on board. And it's just started happening. And I'm sure our friends, our international developers, bankers, and all are also going to be part of your trade mission. And I think everybody will contribute to this growth.
Excellent. Thanks very much for your answer, Satya. So with that, I would like to ask the question to the group. So the poll we would like to ask you is how likely is it that this announcement of killing 10 birds with one stone will actually happen? You can feel free, as I'm speaking, to fill in your answers, but essentially, we want to gauge how likely people think it is that the Indian government will be able to introduce some of these policies that could be able to favor foreign investors and developers amongst others, and just favor the solar industry in general. So yes, we'll just give it 2 more seconds to that. The answers are all coming in right now, and we're getting some pretty interesting results here. Yeah, and I think that's just about everybody. So yes, we'd like to show the results and let's see what people think. How likely is it? So okay, 48% of you have said that it's likely. Only 8% said very likely, 32% unlikely, and there's still some undecided. But so I think there's a pretty even spread there, with a bit of a more of a lean towards likely. I personally think that the progress that's already been made in the past couple of months is quite remarkable, and I do see a lot of steps being taken. So yeah, and actually maybe I can also bring the question also back to Jasmeet to comment on that as well. Jasmeet, how likely do you think that these policies will be implemented?
So I think how I would put it is that there's this 100 gigawatt target, which is a rallying point for everyone. But how I would look at it is that yes, there is this 100 gigawatt target, and the government is doing all those things. I would place my bets on the market fundamentals, which are very strong by themselves, and not completely focus on 100 gigawatts as a number. Just looking at the different options that India has to grow its energy basket, and looking at the kind of irradiation we get, and the kind of support for solar in the country, both political as well as public. And so I think just looking at the fundamentals of solar, I would place my bets on that more than just policy announcements and targets.
Thanks very much, Jasmeet. No, I think I think you're right, and I've read also in some of your reports, and I think a lot of the experts in the market are currently, I think, moving beyond just the constant question of is this 100 gigawatt goal reachable, and how much will be installed, but rather to focus, like you said, very much more on the opportunities, and really start with project development. And again, there's a lot of still a lot of pending policy decisions, I think, that are going to shape how the market is going to grow. But again, I mean, from our side, Solar Plaza, we're extremely confident in the market, like you said, and I think also Satya said, the landscape has changed so much since our last event, and we're really starting to see a lot of new players coming in, and both nationally and internationally. So yeah, no, I think that it's quite an interesting opportunity here for new players into the market. Yeah, specifically on, and I know that I kind of asked, but maybe I wanted to ask this question to Satya. In terms of dollar-denominated bidding, how likely do you think that this will actually happen? I know that this is on a lot of foreign investors' minds. A lot of investors are waiting on this potentially very interesting mechanism to attract foreign investment. How likely do you think, Satya, that this will actually happen?
This is almost a done deal. I think the minister is committed to it. And today there was yesterday there was an article in Financial Times London. Saying India courts solar investors with dollar contract plans, and gives a very interesting write-up about this dollar-denominated PPA. So it's for sure. And then there is another article quoting the ADB president who was in Delhi, saying that ADB will increase lending to India by 50% to $12 billion by 2018. I mean, India is going to get a big chunk of the additional expanded lending capacity of ADB. And I think also India is set to grow at a higher GDP is going to grow at a higher rate than China this year. And there's another article about tax-free bonds. I mean, people who invest in these bonds in India, the interest is not taxed. So this is from quoting Director of Finance of IRIDA, saying that IRIDA made a request to raise about 20 billion rupees. So I think these are all very positive things, and I think tax-free bonds are also going to be issued by IRIDA, Power Finance Corporation, Rural Electrification Corporation. I think all these are happening. This is what we didn't see earlier. The banks were not on board completely. The Power Ministry was not on board, maybe 3 years ago, 5 years ago. Now they're all on board. So I think they're all on the solar bandwagon. So I think the dollar-denominated PPAs will definitely happen.
Excellent. No, I think again a lot of people are waiting on this, so it's very good to hear that you're so positive on this. One last closing question for Jasmeet, because I know that that's always on a lot of investors' minds. We really want to, or investors really want to understand the risks involved, and so Jasmeet, what would you say are some of the major challenges that still exist that need addressing in the Indian market that could sort of stop foreign investors from wanting to enter the market?
So I'll break it down into two parts. One are the market level risks, and one is then project level risks. So obviously market level risks, I think, are primarily would be focused around what's the appetite for solar power overall by the discoms, and how much would they be willing to buy. Again, within this there are two perspectives. One is that a lot of these discoms are in a poor financial health. They're even hesitant to buy conventional power in some cases because they're not profit making, and they don't really want to expand business in that sense. So they just their willingness to buy all this solar power is a questionable, in the sense that will it really happen? So that's the kind of market level risk. But if you look at it from another perspective, if they do buy 10% of their power, which is say 20% more expensive, that's still just 2% more that the customer has to pay. So in that context, it doesn't look too big, and 100 gigawatt of solar power produces equivalent of say 20 gigawatt of thermal power, and that's not that big a deal in terms of overall energy consumption in the country. So just, I mean, you can look at both these perspectives, but yes, there will always be this question that will these power distribution companies at the state level buy all this power which is coming through. Another big risk on a macro level is the grid's ability to take so much solar. So there is solar, and there will also be wind and other intermittent sources of power, which means that, for example, Germany today has, say, 5-6% of its energy coming from solar in energy terms, not in installed capacity terms. And if India does 10% of its energy coming from solar, that's a huge deal. I mean, for the grid to be able to operate without failures or without issues is again something that can be a question. Whether or not this will lead to a curtailment from projects is now we move into the project kind of risks in the future. So curtailment of power in the future. Obviously, today we don't see curtailment for solar projects. At least there has been some curtailment for wind in Tamil Nadu, which is one of the South Indian states. But going forward, will there be curtailment issues for the project level? For projects which are outside of solar parks, will developers be able to procure land? If they do procure land, will they get the right of way? Because land is a big issue in India, and will they get the right of way to connect it to the local feeder? So I think these are some of the key issues which need to be considered while making the bids and investing into project level into projects and building portfolios into India.
Excellent. Thanks very much, Jasmeet, for presenting some of those. Thanks again, also Satya, for your insightful comments and your presentation. I think this gave a pretty good introduction and overview into some of into the current state of the Indian market. I think it's definitely, as I mentioned, a market that Solar Plaza has been watching for quite some years, and I don't think we've ever been as optimistic as we are. I think 2015 we're really starting to see the market kicking off, and like you said, I think there are, like both of you said, there are still challenges that need to be addressed. And I think actually, so bringing it back to our delegation, our trade mission that we'll be organizing in October, we definitely hope to be able to, bring the opinions of foreign and local investors, project developers, and be able to engage in dialogue with MNRE, with SECI, NTPC, all the public-owned institutions. Again, if you're interested in learning more about the trade mission, please feel free to follow the link on the slides, or feel free to contact me personally. Again, Jasmeet and Satya, thank you very much. I very much look forward to hearing more, delving into this in October, when I'm sure we'll see a lot more progress in the market. Also, for all of you, please feel free to follow both Jasmeet and Satya, as well as Solar Plaza. We regularly release reports and different resources and information about the market. So please feel free, if you're interested in learning more updates and subscribing to our newsletters and staying in touch. A lot of questions were asked that we weren't unfortunately able to answer during this time of the webinar. We've already gone 15 minutes over schedule. However, all these questions have been recorded, and we will forward these questions also to the speakers that you asked, and also just feel free to continue sending questions and moving forward. Again, thank you very much, Satya and Jasmeet. I look forward to seeing you both in October, and yes, until then, thanks very much.
Bye-bye.
Thank you.